You owe the bank. The bank owes someone else. Governments owe trillions. So here's the real question. If everyone owes everyone money, who actually has it? By the end of this video, you'll understand the hidden system that keeps the whole world running.
Picture this. Every dollar you own is someone else's debt. Your savings account, your retirement fund, the cash in your wallet. It only exists because someone, somewhere, owes it back. That's not a metaphor. That's the system. And once you really see it, it becomes hard to unsee. Because modern money doesn't sit still. It circulates. It stacks promises on top of promises. And it works shockingly well, right up until it doesn't. Tonight, we're pulling apart what really happens when everyone owes everyone money. Why it feels stable, why it feels fake, and why the math underneath it is quietly uncomfortable. This matters right now because global debt isn't just high, it's historically extreme. Governments owe more than they ever have. Corporations owe more than they ever have. Households owe more than they ever have. And somehow, markets still act like this is normal. So let's slow down. No jargon, no lectures, just the story of how debt became the operating system of the modern world. Start small. You deposit $1,000 into a bank. You think the bank holds it for you. They don't. They keep a fraction, then they lend the rest. Your money becomes someone else's loan. That loan becomes someone else's paycheck. That paycheck gets deposited into another bank, which lends it again. One original $1,000 quietly turns into several $1,000s of claims. Not counterfeit money, not fraud, just accounting. This is how money is created. Most people imagine governments printing cash. In reality, banks create money when they issue loans. Every loan creates a deposit. Every deposit is someone else's liability. Assets on one balance sheet, debts on another. Everything balances, as long as payments keep flowing. And that's the first rule of the system. It doesn't require everyone to pay their debts. It only requires enough people to keep paying enough of the time. Debt is not a problem in this system. Debt is the fuel. Governments run deficits. Companies issue bonds. Consumers swipe credit cards. All of it pushes money forward in time. We borrow from tomorrow to live today. And as long as tomorrow looks bigger than today, nobody panics. That's the quiet assumption holding everything up. Growth. More income later. More productivity later. More taxpayers later. Debt only works if the future expands faster than the interest. For decades, that assumption felt safe. After World War II, economies grew fast. Populations were young. Productivity surged. Technology exploded. Debt made sense. Borrow now, grow later, pay it off easily. But here's where the story shifts, because debt compounds relentlessly. Interest doesn't care about optimism. It doesn't care about politics. It doesn't care about narratives. It just accumulates. And at some point, the system reaches a strange phase where new debt isn't creating growth, it's just preventing collapse. Imagine riding a bicycle. As long as you're pedaling forward, you stay upright. Slow down too much, and you wobble. Stop, and you fall. Debt-based economies work the same way. New borrowing pays off old borrowing. New spending keeps revenues flowing. New promises roll over old ones. Nobody says it out loud, but stability depends on motion. This is where the math gets uncomfortable, because total global debt has grown much faster than the real economy. That means each new dollar of debt creates less real output than before. More leverage, less payoff.
like needing stronger and stronger caffeine just to feel awake. At first, it feels manageable. Rates are low, payments are small, markets stay calm. But the system becomes sensitive. Tiny changes in interest rates suddenly matter a lot. Small slowdowns ripple everywhere. And here's the irony. The safer the system appears, the more debt it encourages. Low volatility invites leverage. Stability breeds risk-taking. Banks lend more. Investors stretch further. Governments promise more. Because nothing bad has happened yet. Then something interrupts the flow. A recession, a pandemic, a geopolitical shock, an inflation spike. Suddenly, tomorrow looks less predictable. And when confidence cracks, the system doesn't fail gracefully. It tightens. Banks pull back, credit dries up, asset prices wobble. Not because money disappeared, but because trust did. Debt is a promise about the future, and confidence is the only collateral. When everyone owes everyone else, nobody can afford widespread doubt. This is why governments and central banks step in so aggressively during crises. They're not just saving banks, they're protecting the web of promises. Lower rates, emergency lending, asset purchases. It looks artificial, because it is. But the alternative is letting the chain snap. And chains don't snap evenly. They snap at the weakest link. Households with variable rate loans, companies with thin margins, countries borrowing in foreign currencies. Losses cascade. One default forces another. One missed payment freezes a balance sheet. One panic spreads faster than facts.
This is why the system hates disorder. Not because it's fragile in the short term, but because it's interconnected in ways that are hard to unwind. There's no clean exit from everyone owing everyone, only resets. Sometimes those resets are quiet. Inflation slowly erodes the real value of debt. Payments stay nominally the same, but cost less in purchasing power. Debtors win, savers lose. Nobody throws a parade. Other times, resets are loud. Defaults, restructurings, currency devaluations, promises get rewritten. And then there's the option nobody likes to say plainly: printing, creating new money to service old obligations. It doesn't erase debt, it dilutes it, like adding water to soup. The bowl gets bigger, the flavor thins. This works until it doesn't. Because money is only useful if people believe it holds value, and belief is a fragile thing. The strange part is how normal all of this feels while you're inside it. Mortgages, student loans, national deficits, they fade into the background. Numbers scroll, markets move, life goes on, until suddenly they don't. History is full of moments where debt quietly accumulated, then loudly unwound. Not overnight, but faster than anyone expected. The danger isn't that everyone owes money. The danger is assuming they always will. Because debt ties the present to the future, and the future has a habit of disappointing. Lower growth, aging populations, resource constraints, all slow the machine. Which raises an uncomfortable question. If growth stalls, if interest costs rise, if trust weakens, who actually gets paid? Because not everyone can. That's the part most discussions skip. Debt systems assume repayment in aggregate, but in reality, repayment is selective. Some debts get honored, others get restructured, some simply vanish. Losses are socialized, or concentrated, or hidden. And the distribution matters. It shapes politics, it fuels resentment, it changes how people see institutions. When everyone owes everyone, blame becomes blurry. Is it the borrower's fault? The lender's? The regulators? The systems? No clean villains, no easy fixes, just trade-offs. More debt buys time, less debt brings pain. Stability demands intervention. Intervention distorts incentives. Every solution plants the seeds of the next problem. And that's the quiet humor in all of this. A system designed to manage risk ends up manufacturing it. Not maliciously, not incompetently, just mechanically. So where does that leave us? Living inside a network of promises so large no one can fully map it. Dependent on confidence we barely think about. Balanced on assumptions inherited from a very different world. Maybe the system adapts again. It often does. Maybe growth returns. Maybe technology bails us out. Maybe inflation slowly rewrites the ledger. Or maybe something breaks in a way we haven't seen yet. The unsettling truth isn't that debt exists. It's that the system requires faith that tomorrow will be bigger than today, forever. So the real question isn't whether everyone owes everyone money. That's already true. The question is how long a system built on borrowed futures can keep functioning before the future finally sends the bill.